Good afternoon, and thank you for joining us for the 2017 State of the Industry webinar. I'm Brianna Listman, Managing Editor of Boating Industry Magazine, and I will be moderating today's panel. Today's webinar will be recorded and available at boatingindustry.com/webinars if you would like to see it again afterward. Today we are here to share some market intelligence and data with you, and we have 3 industry experts on the panel. Peter Hausworth of InfoLink, Noel Lace of Spader Business Management, and John Burnham of Boats Group. All attendees are in listen-only mode, but you can ask questions through the GoToMeeting module on your screen. After our panelists speak, we will answer your questions, but feel free to submit them at any time. This webinar is the companion piece to our annual market data book. If you are a subscriber to the magazine, it is included in your subscription. If you haven't gotten it yet, it will be coming in the mail soon. It is also available in the digital resources section of our website, and the direct address is on your screen. With that, I will hand the presentation off to Peter to get us started.
Thank you, Brianna, and good afternoon, everyone. Thanks for joining us. I have just about 10 minutes or thereabouts, and I wanted to spend a few minutes of that time commenting on recent trends that we're seeing in the industry. But really, I wanted to reserve the majority of that time to talk about a more holistic and longer-term view of things that we're seeing and what they might imply for the future. Brianna, can you advance the slide, please? Brianna, are you there?
I am. Are you advancing the slides right now, Peter?
I am not, but it's just on the opening slide.
Interesting. Okay. My screen right now is showing the next screen with the National Powerboat Summary and the status quo, and it looks like it's moving around a little bit more. Are you clicking around at all?
Oh, I'm trying, but it's not, it doesn't respond to anything.
Okay, it does look like it's responding on my screen. Give me 1 second.
Okay, well, if you want to just go to the first, I'm just seeing the state of the industry with the, with the hat and the logo, so.
Absolutely. Here, let me try one more thing.
There we go. All right, now it's moving. Okay,
all right, so now we have to go backwards real quick.
There you go.
Sorry, everybody. All right, here we go.
There we go. Okay. So anyway, I wanted to spend just a couple of minutes on some of the more recent things, and then spend more of the time talking about longer-term things that we're seeing and some of the implications that that we think that those things imply for the future. Next. As it relates to recency, it's been kind of a status quo. We're continuing to see growth in the single digits. On the positive side, it's our 5th year of consecutive growth, and for those who are in the industry back in 2013 and the years before that, that's a breath of fresh air. So that's that's on the positive side, and one of the things that we have also noticed is that with respect to this year, and this is through June of 2017 with 260,000 units sold so far, is that we've had some moderation as the year has gone on. So the first quarter and through May, we were seeing growth rates in the 7 to 8% range, and now that seems to have moderated a little bit. So nothing serious, but we'll just continue to watch that. Next. Geographically speaking, it's pretty well distributed across the U.S. It's a little bit stronger on the eastern half of the country than in the west, but it's broadly based, which is a positive thing. It's not like we have just one or two markets that are doing well and others that are not. And I just wanted to call out also Texas, which obviously is a big boating state. It is red, but it basically is at 0. So it's it's not as bad as quite as the slide makes it look. Next. So where is the growth coming from? It's been pretty much the same things consistently since the recovery really began. Pontoons and saltwater fish continue to lead the way. The pontoon boat market now is at 54, basically 54,000 units through June. At this point in time, pontoon boats represent more than 1 out of every 4 boats among all power boats that are sold in the U.S. 1 out of every 4 is now a pontoon boat, which is a pretty significant change when you look at it over a longer period of time. And then saltwater fish has been, kicking along in there and doing pretty well as well. So, and those are the 2 major segments. The towboat market is also doing well, but it's much smaller, so it doesn't really kind of influence the overall picture as much as some of these, the big markets like pontoon and saltwater fish. Next. So when we were looking for growth, one of the things that we started looking at was, to see, okay, what are we missing in terms of, if we were looking for more growth or what's not looking quite as strong as we'd like. And the answer to that question is smaller boats. What this slide just basically shows you the proportion of boats that are 21 foot and shorter versus 21 foot and larger. So in real terms, over since 2008 or actually 2009 to today, yes, in real terms, even small boats are up. But if you look at really the growth and the recovery rate for boats that are 21 feet and larger versus those that are 21 feet and under, it's almost all of the growth has occurred in boats that are 21 foot and larger. And that also includes, the growth segments. So even smaller saltwater fish and smaller pontoon boats are not doing as well as those that are over 21 feet. So you could look at that and say, well, that's good news. Find bigger boats, higher margin, and yes, that's true. But there's also another, kind of side to that is that, these smaller boats are generally where entry-level boaters tend to live. So that's somewhat of a concern as well. And it's just if you look at the base of the U.S. fleet, it's just a lot of small boats, and then relatively fewer as you go up the length. There's less and less of them. But we're seeing a much smaller component of smaller boats coming into the market. So that's next, please. Those are my comments with regard to the recent scenario. So now we're going to kind of switch views, and we're not counting boats anymore. Now we're looking at households. We're counting people. So if you go back into 2000, which basically was the kind of the peak year within the last 20 or so, there were 9.8 million boat-owning households in the U.S. And obviously, over time, as you can see there, by the end of 2015, we were down at 8.6 roughly, and that is a rate of decline of about 12% over that period of time. If you look at the green line, what that is it that reads off the right-hand axis, and that's basically the U.S. Household population. So over that 2000 to 2015. The population has gone from basically 100 million, a little over 100 million households to over 120 million. So we have a larger base, but we're becoming a smaller club, if you will. And then we also use that information to project, and I'm going to get into more of what lies behind this, but we're basically assuming the adoption rates and retention rates and defection rates and the population trends that are there and quite evident. What we project for 2020 and 2025 is that the industry is going to continue to contract a little bit, but at a slower rate than what we've seen over the last period. Next. So why is this contraction happening? It's basically because we're not replacing boats as quickly as boaters as quickly as we lose them. We did some work and basically went through and established there were 2.4 million first-time boaters who entered the market. So they entered via a boat purchase between 2005 and 2010. Over that same period of time, 2.9 million exited, and that's all forms of exit, from lapse to age out to every form of exit. We then looked at that information for 2010 to 2015 and found that 2 million first-time boaters entered the market and 2.6 million exited. So a couple of things here. One is, obviously we want to see more first-time boaters as opposed to less. That obviously is something that would help us. The other thing that is good news is that the absolute number of people who exited went down. So from 2.9 million to 2.6 million. So yeah, it's not a beautiful thing to see that that our growth is still not keeping up with our defection. But at least we are not getting more people leaving boating. If that were a 3.2 million exit, then I would say, hey, we've got a more immediate problem. I mean, it's still a problem, but if more people were leaving in real terms, then that would signify something a little bit more more pressing, I guess, if you will. Next. So, what does this kind of look like in terms of numbers of people for first-time boaters? We went back to the year, so this is just in a single year now. 633,000 first-time boaters came into the market in the year 2000, and they represented 42% of all boat buyers. And you can see it's just steadily declined. So now we're down at a little under 400,000 first-time boaters, which is 33% of all boat transactions. So we're increasingly just selling to the same people over and over again. And we make a distinction here just because we can break it down and see what's happening with new and what's happening with pre-owned. But we think more importantly is the total number, because that's our pool of future buyers. And how people get here, these are things that have been in place for a long time, and what we need to see is more people coming in, plain and simple. Next. I hesitated to put this slide up because I feel like sometimes it feels like we've been beat to death, but I think it just it kind of lays out the issues that we're dealing with. And that basically is the aging of the boating population. So if you just visually draw a line from the 35 on your screen straight up, back in the year 2000 there were approximately 1 million that were in that age range. 1 million boaters that were 35 years old. If you draw a line just visually straight down by 2015, there are only 400,000, so that's a contraction of 600,000 households. The reverse side of that, or the counter to that, is that our aging consumer is actually staying in longer. So if you go over to the 69 category, in 2000 there were only about 400,000 in the 69-year-old age range, which today now is relatively young, but and today now there are 800,000. So you got +4 and -6, and basically that's that's kind of what's leading to this contraction is just this continual aging, and then we're not replacing from the front end. Next. What does this portend for the future? We took basically, again, all these, the adoption rates, defection rates, and the population, and obviously the population is going to continue to increase, and we know exactly what that's going to be. And what we anticipate happening is this continual shift. So you can see for the year 2020 and 2025 that it's continuing to be pressed, towards the right hand, that the boating population is going to continue to age. One thing to also notice, however, is that that the slope of those lines is continuing to get more vertical, in that more of the population will be towards the older spectrum, and therefore have a kind of shorter, for lack of a better term, shelf life, in terms of how long can we sell boats to these people, because there is still at some point mobility is just the issue, that you just can't physically get there. So it's wonderful to see, and it's great, but the reality is that and we have some time, but it's there, so I don't think we should necessarily ignore it. Next. And then lastly, working with the folks from the NMA, Grow Boating, Discover Boating, so on, we did some exploratory work on with respect to the retention and defection. And this is just one element of a lot of different things that are going on in that regard while we try to do something about this. So if you start with the chart on the left side, we basically isolated 2,000 people who purchased a boat in 2005, and kind of fast forwarded to 10, 12 years later. What is the status of those people today? So you can see almost 30%, 29% of those first-time buyers still own the boat that they purchased then. And obviously, 71% of those have sold that boat. And if you work to the right, then so of those people who did sell, how many people actually went on to purchase another boat, and how many left boating? So you can see the 2773. So adding the two, basically the still own, because they are still in our industry, and that's what we're looking for, and the 27% who moved on and purchased another boat, a different boat, a bigger boat, a smaller boat, some other type of boat. Adding those two together gives us a retention rate at a 10 to 12 year time horizon of about 56%. Is that good or bad? Higher would always be better, but that's what it appears to be today. And then lastly, we've thought, well, is it more common for there to be a lot of churn, a lot more churn based on certain boat types that kind of we're accounting for the majority of this movement underneath of people who make it to our industry but appear to not stay. So we basically ran that information across the various different boat types, and actually we're very surprised to see how very consistent it is. Well, the bad news is it's very consistent, that when we leave, we defect a certain number, but I guess for lack of a better term, we are all in the same boat, that we're all have this issue in front of us, and so that's what we're going to try to deal with. That's the bulk of my comments. Brianna, I'll send it back to you.
Thanks, Peter. Now we will hear from Noel.
Thanks, Brianna. Thanks, Boating Industry, for sponsoring this webinar and producing the market data book, and thanks to all of you who have joined us today. As I was reviewing the data book, the section that I'm going to be talking about today is on the dealer metrics, and there were a couple of points made in there. One of the comments was 2016 was generally a good year. And another comment of 2017, the outlook is positive. And I would agree with both of those. And I've got some numbers that I want to share with you today. As we work with dealers, there's the top 6 key metrics that we encourage dealers to watch. And I didn't put these on a slide, but if you've got a pen and paper, you might want to write them down. The first one, and obvious, is profitability. How profitable are the dealers? The second one, debt to equity. It's a balance sheet ratio. It's important from a balance sheet perspective. Third one that you may not be familiar with, but it's becoming increasingly important, is what we call return on inventory investment. The fourth one is the AI, or available income, or more commonly known gross profit per employee. The fifth one is your personnel rating. How would you rate your staff? And number 6 is a market share. Those are the top metrics when we're looking at a set of dealership financials. Those are the things that we look for. Today I'm going to limit on time, so I can't cover all of those, but I want to focus on 3 of those metrics and show you what's been reported to us over the last 10-year period. So Brianna, if you advance the slide, please. So my first slide is the last 10 years of new boat sales. And you can see that once again in 2016, our 6th consecutive year of growth in new boat sales, and not quite the top in the last 10 years, but the second, close to the top. So the good news is that new boat sales are continuing to grow. Brianna, if you go to the next slide, please. So if you've tuned in the past, what you remember is as new boat sales, we're watching the growth of new boat sales. And as they were growing, you can see that on the right side, I have our new boat inventory. And that for the last 4 or 5 years, the new boat inventory was continuing to grow to keep up with the new boat sales. This year, in 2016, we can see that new boat sales from 2015 to 16, we had a 4.7% growth, but our inventory from 2015 to 2016 actually declined. New boat inventory declined. Now, what's important about that is the turnover. The average turnover for new boats with the dealers that report to Spader was a 2-turn in 2016, and that's the highest turn that they've had in the last several years. So new boat sales have grown last year, but inventories have leveled off and actually decreased, and thus we have a higher turnover. Next. So we looked at the top line, and now we take a look at the bottom line. So this is one of the 6 key metrics that I mentioned, is profitability, the net profit as percent of sales. And in 2016, you see that dealers reported a net profit of 4.5% of sales, or for those of you who are used to looking at that number as a percentage of available income or gross margin, the average net was 16.8% of gross margin. Next. So in this next slide, we see the same graph, but I've overlaid the green, the yellow, and the red. And so those of you that follow Spader You may have heard that what we call survival net profit is between 3 and 3.5%. It's in that ballpark. And so the good news is 2015, the dealers moved out of survival net, 4.3%, and they climbed even a little higher to 4.5% in 2016. So in the last 10 years, it's only the third year that dealers were above survival net. And by survival net, we mean a profit, a net profit, whereby you can continue, you can pay all of your expenses and continue to invest in the business to grow your dealership in order to grow your market. So 2 consecutive years above survival net is very, very, very good, and we'll hope that we continue to see that that line continuing to grow. Next. So this is a look at the new boat gross margin percent, and we talked about this last year on the webinar, that the new boat gross margin has been down. It's been headed in a downward trend really since 2012, when the peak of 18.1. It's declined by a little bit each year, so to down in 2016, it was 16.4. And this is a trend. Many of you know that we work in several what we call big ticket industries, motorcycle dealers, farm equipment dealers, RV dealers, and boat dealers. And this is a trend that we're seeing across all of those industries. Is there's a lot of downward pressure on gross margins. Consumers are shopping more than ever. The invoices and comparative pricing information is more available now than it has been ever in the past. And so that has contributed to this downward pressure on margins, in this case, new boat gross margins. Next. So next to the new margins, we put the used margins, and we see the story is very similar there, that the trend on used margins has also been headed downward. Used, of course, is a little bit different because it's harder to compare when shopping the same used, but again, margins are headed in the downward trend. So, what does this mean? A lot of our dealers are asking now, well, what can I do? And this is, as I mentioned, it's true in other industries. So it's really outside of the dealer's control in a lot of situations. So it's important that we look at another metric, again, one of our top 6 metrics that we talk about. We call the return on average inventory. If you go to the next slide, Brianna, please. The return on average inventory compares the margins that we are returning to the average inventory that we keep on hand. So if our margins are declining, how do we ensure that we keep our dealership profitable with a declining margin? Well, one of the ways is to do a better job of managing our inventory costs, of keeping our cost of inventory lower, so it has less of an impact when we have lower margins. And so the metric to look at that is the return on average inventory. And so in this slide, you will see that in 2014, the return on average inventory, 42.3. It increased a little bit to 42.6, and then in 2016 went to 43.9, almost 44%. One of the metrics that we use with our dealers is, or the guidelines is that we like to see this number at a minimum of 40% or greater. And so even as margins are declining in the period of decline, that return on average inventory has had some growth in the positive direction, and that's really good news because what it says is the dealers are better managing their inventory, and that's one of the things that you need to do to combat the lower margins. I just looked up the 20% most profitable dealers, and their return on average inventory for 2016 was 46.2%. So the most profitable dealers even had a little higher return on average inventory. And the way to calculate that is your year-to-date available income divided by your average inventory on hand. So again, one of the key metrics that you should be monitoring for your own dealership. Next. So we change gears a little bit and look at the cost side, and we start with the personnel expense ratio. And if we look at 2014, 15, 16, it was fairly level, decreased a little bit in 2016. Brianna, if you go to the next slide. So now we've overlaid the Spader guidelines. Above 45 is what we would call a red flag, and then yellow and green. And so as we noted last year that when we look at the past 10 years, the personnel expense ratio has not been within the Spader guidelines for the average dealer. Go to the next slide. So once again, I looked at the 20% most profitable dealers, what their personnel expense ratio was. And so now we see that number, come down a couple of years. 2012, 2013 was in the green area. And 2015 and 16 was just outside of the green area. And I share that with you so that you see that there are dealers that are able to keep their personnel expense ratios close to those guidelines. Now, one of the reasons, and we'll see this in just a little bit, one of the reasons that dealers have been able to be profitable, to remain profitable, but have their personnel expense ratio outside of the guidelines is because some of our other expense ratios have been well below the norms, and we'll see that in particular with floor plan interest. Next. So one of the, if I remember the 6 key metrics that I talked about, one of those was the average available income, or the gross profit per employee. We're having to do more with fewer employees now. Again, the margins are declining. So we can see that in 2016 to 17, so these numbers are July 1, 2016 through June 30, 2017. We can see that we had significant growth in the available income per employee, $145,070 of AI per employee. How much available income, or how much gross profit did each employee in the dealership contribute? So again, another way of combating the pressure on declining margins is to be able to produce more by each of the people that you have on staff. And the last couple of years, we've seen nice growth in that metric. Next. So here's our advertising expense ratio, and Brianna, go to the next slide and we'll see the overlay. We can see that there's been a couple years that we were down into the green area, but generally very close to the Spader guidelines. A little bit of an increase in 2016. Next. And here's our floor plan interest expense ratio. So this is the one that I was mentioning earlier. Brianna, overlay the next slide. Thank you. So you see, we know that we've been in a period of low interest rates, and we see that on this graph that our floor plan, that the amount of our gross profit that we've had to spend on floor plan interest has been down in the 3%, which historically dealers are up closer to 7%. So we've enjoyed a period of low interest. I was just reading yesterday that there's some discussion about whether the Feds might not increase interest because, again, the economy has been growing at a slower pace, and they're maybe thinking about not increasing it. So it seems like, at least for the foreseeable future, we're going to enjoy low interest rates. But what's happening is we're spending those dollars in other areas, and in the slide that we saw earlier, we're spending it in personnel costs. Long term, I think over the next 10 years, we won't have that luxury of being able to do that. Next. And then here's our variable expense ratio. If you do the overlay, Brianna, we can see that it declined a little bit in 2016. We're in that yellow range, 13.5%, but a downward trend. Next. And then our last expense ratio is our fixed expense ratio. And so both variable and fixed have been a little bit outside of the guidelines, but we've been able to have a profitable dealership because we're enjoying those low interest rates. On my last slide, the next, I wanted to give you just a preview of how this year, these are the numbers as of June 2017 compared to June of last year. Some of the key numbers: new boat sales from the dealers that reported to Spader are ahead of last year by about 13%. Used boat sales are up less at 3.2%. Service and parts are both ahead, but not to the same level that new boat sales were. And doing a better job of managing our service and parts is key as we experience a continued downward pressure on boat margins. So that's an area of opportunity for many of our dealers. Our expenses were up by about 6% from June this year to June last year. And so bottom line, the net profit is a little over 8% ahead of where it was last year at this time. That's my information. Thank you.
Thank you, Noel. Next, we will hear from John.
Thank you, Brianna. Appreciate the chance to represent Boats Group on today's call. Up until February, who might not have caught, was Dominion Marine Media. Next, please. In boating, this a data report and a few different looks at trends in drawn about those plus connections.
Hey, John, it sounds like something might be a little off with your speaker connection right now. We caught just a little bit of that.
Okay, let me try something different.
That sounds very clear.
Is this better?
Yes.
Okay, so I was just saying, in Boating Industries' August market data report, we provided an update on U.S. brokerage sales and a few different looks at trends in search data drawn from our sites, Boat Trader, Boats.com, and Yacht World. Am I coming through okay now?
Crystal clear.
Okay, great. So I'm going to talk a little bit about them, plus our new initiative called Connections. Next, please. So we'll start with brokerage sales data, which, as a reminder to those who don't follow this regularly, it's data that's voluntarily reported by Yacht World member brokers in a database that we call Sold Boats. These reports of actual sold prices are for their mutual reference when they're advising clients on pricing. And we share it in the aggregate with the rest of the industry to track the trends. The data on the next 3 slides represents sales over the 12 months ending May 31st. Next, please. Thanks. So compared to the previous 12-month period, declined 737 boats. That's about 2%. On a percentage basis, the decline was similar for power and sailboat sales. But interesting thing is the total value of sales increased by $259 million, and boats sold on average 10 days faster. So what does that mean? Simply put, we can say that brokers are selling fewer boats, boats are selling faster, and brokers are selling higher valued boats. So next, please. When the total market volume declines, I think Peter said something related to this, it means fewer small boats are selling. So fewer boats in this lower end of the market were selling in the last year. And notably in June and July, since this report, we've seen the trend continue. Yet the total value of boats sold, even in this end of the market, has increased in all 3 size ranges, and average sold prices are therefore up significantly. What does that mean? We think to an extent brokerage is restructuring. Brokers aren't selling as many small boats, but when they list a small boat, they focus on higher unit value boats. The smaller, cheaper boats probably haven't gone away, but are likely available through dealers and other sellers on sites like Boat Trader or through other channels. And overall, consumers are spending money, and the brokerage market is probably healthier than the volume would indicate. Next, please. So the upper end of the market now, this also shows generally higher prices and faster sales. Here, the volume of sales is holding up better than in the low end. So where are we headed? Since this report in May, brokers we've spoken to about this segment have been uniformly positive. It would be even better, though, they tell us, were it not for lack of recent model inventory built in 2009 through 2014. On the other hand, more buyers are turning to new product, which means dealers and those brokers who are selling new boats are well positioned. You've heard a little bit about that earlier today. A noteworthy trend is that larger sailboats are selling well, which is kind of interesting. It shows consumer confidence even in this traditionally very conservative buying segment. Next, please. So now let's switch to one of the biggest trends in search. In case you missed this graph in boating industry, we're showing here a view of search devices used to look at listings on one of our sites, Boat Trader. In 2012, mobile devices captured 20% share of all devices, and we thought that was pretty interesting and remarkable. And it was led at the time by the introduction of the iPad and other tablets. That's the green part of the bar there. In 2014, tablet viewership peaked on a percentage basis at about 20%. But smartphones, as you'll recall, kept getting larger and larger screens and more ownership, and their usage has just continued to grow quickly. And they've now come to nearly equal desktops for views on Boat Trader. So our conclusion, probably not, don't have to be a genius to come up with this, but when 2017 is done, we expect smartphones will be ahead of desktop computers as search devices. So that's really something to think about when we are deciding which device to use when reviewing the new design for for our latest websites, both our sites and yours. Next, please. The other trend, which naturally follows, is that with more mobile devices in use, more listings are being viewed on sites like Boat Trader. We've seen close to 40% growth in listing views, from 79 million unique monthly visitors in 2012 to 110 million in 2016. As mobile device views have grown dramatically, desktop views have declined, but not by as much as you might think, roughly 25%. So our conclusion on this is the trend really means that there are more chances for a dealer's listing to be viewed, sometimes repeatedly. People are doing more research. The auto industry has seen email and phone leads flatten during this process, and we're likely to see the same thing as shoppers continue to engage with dealers in different ways. So how do they engage with your listings? One way is to look at the page, and we can measure that. But another that reflects this trend is what we're calling connections. Connections are engagement that's become important in the auto industry and is proving to be at least as valuable. When people come to the dealership, they're, as a result of all their connections with the listings, they're much more prepared and ready to buy. Next, please. So across our sites, we've begun measuring connections. This graphic shows tracking of 6 metrics on the 3 sites combined, Yacht World, Boats.com, Boat Trader, for one quarter, the second quarter of 2017 versus the second quarter of 2016. The most common connection that we're measuring is a referral to the website of the dealer, broker, or boat builder. That's closely followed by Save Boat, which is a tool that we have to make it easy for consumers to return to view a boat multiple times, perhaps show it to their friends on their smartphone. View All Inventory allows consumers to easily broaden their search to learn what other, perhaps similar boats a seller has in stock. Map View helps the consumer quickly see where the dealer is. Our goal is to help dealers understand the consumer activity their listings are generating before they receive either an email lead, phone call, or have the consumer walk in the front door. That involves constantly testing different ways to help buyers engage, learning what they want, and helping to optimize their experience so that they become more valuable prospects. One takeaway for boat sellers is that there are many ways for prospects to engage with your boat listings now, long before they give you a chance to engage directly with them. So it's that much more important to create great listings. The more deep information, including the price, the more engagement and interaction your boat listings will generate. That will lead to a greater chance of selling your boat. Next, please. And that's what we're all after, I think. On behalf of Boats Group, thank you. Let me pass it back to Brianna.
Thank you, John, and thank you again to all of our panelists. At this time, we will take your questions. Again, if you have a question for our panel, please submit your questions through the GoToMeeting module. Just as a reminder, the webinar will be archived at boatingindustry.com/webinars, and that archive will be up by tomorrow. So one question I do have right away is, how do you see the popularity of fractional boating, for example, Freedom Boat Club, Carefree Boat Club, impacting boat sales? I think that question is for anybody.
Well, I guess by default, I'll go ahead and take that one. I see it as a positive. I think, from all the work that we've been doing with Grow Boating and Discover Boating and NMMA, one of the things that we have learned is that participation is key. For people to truly discover boating, they need to experience it. And I think anybody that's been in boating for a while knows it. I mean, there's certain people you go out, you take other people out. Certain people you can see them light up, and there are certain people who just can't get off the boat fast enough. But the more that they do it, and the more comfortable and the more exposure that they have to it, the likelihood goes up that that ultimately they will, migrate towards ownership. Yeah, sure. Short term, fine. Yeah, there's some. Okay, someone who would have otherwise been required to buy a boat in order to participate. Okay, well, now there are options. So in the short term, okay, there's an adjustment perhaps that takes place. However, to the extent that they are truly interested and they really do get the boating bug, at some point, if they're going frequently enough and so on and so forth, they're going to, I think, migrate to that. I want my stuff on the boat, and I don't want to take all of my things on and off every time I go, and so on and so forth. So, everything that we're seeing says more participation in the long term will serve our industry much better than less people participating. And to the extent that you're closing other, windows of ownership or other windows towards experience and participation, you're lessening the likelihood that you're going to see them on the other side.
Thank you. Another question we have from an attendee is, it sounds like total boat sales are decreasing, but new boat sales are increasing. Do any of you have any idea what is driving the new boat sales?
This is John. I think one factor is that, as I showed in my data, there's a lack of new boat inventory or recent model brokerage inventory. So I think we've been talking about this for several years, and it's finally really starting to happen, where the lack of inventory there leads people to end up comparing 7-year-old boats to new boats. The new boats have technology, and they have that's really starting to make a difference. We hear the brokers.
One attendee is wondering, how do you see remarketing of marine units utilizing auctions?
Not sure I can comment on that.
For this attendee, we do have some information on auctions in our market data book. If you haven't gotten a copy of that yet, I would keep an eye out for your market data book too.
Yeah, it sounds to me like, predominantly auctions are kind of a last resort, of, okay, it's just, it needs a home now, as opposed to, more the day in, day out of what we focus on.
One attendee is asking, is there a concern given less 30 and 50-year-olds are entering the market, and those that do enter appear to be leaving in vast majority?
Yeah, it's true that there are less of them. There are more people, but the group itself is larger, but their entry into boating is lower, the percentage. And there's a number of different reasons for that, and we don't have time to get into all of them. But it's not that people that age are leaving at a different rate than people who are other ages. That's not, they're not getting here. It's not that they're getting here and getting out because they're younger. They're not getting there at the beginning.
As technology drives a higher acquisition cost for new boats, do any of you see a flattening of new boat sales coming?
Well, I guess from our standpoint, what we see that. I mean, the flattening that would occur is, simply that because the proportion of people that we keep marketing to is getting smaller, or actually the number of people that we have to market to is continuing to get smaller, and that we generally the proportion of those people who are transacting are repeat boat buyers. I mean, at some point, everyone kind of said, okay, I've got what I want, and I'm going to be good here for a while, until something else in my life changes, or so on and so forth. So to kind of, and I think that's really why we're kind of emphasizing to try to get some younger, or just more people involved at any stage. I mean, obviously, it's best for our industry that that the people are younger, because then we can market to them for a longer period of time and hopefully sell them 2 and 3 and 4 boats over their lifetime. But to the extent that people are getting into their 70s and 80s, and how many more boats do you think they're going to buy? And even if they're coming in at their 50s, there's only a certain number of years left, versus somebody who comes in at 30. There's more years to market to those people over time. So it's kind of a combination of things.
I'll just add to that. We're seeing the average prices in brokerage sales anyway going up, and that's got assuming that's also taking place among new boats, that at some point I think new boat sales is likely to flatten out at some point. It probably always has, and I think that the amount of dollars available is going to be one of the factors, along with the age of the boat buyers.
Yeah, and I think that also goes into the pricing on pre-owned as well. Is that not only is new getting more expensive as it has been year in and year out, throughout this whole the past couple cycles. I mean, the pricing continues to go up. I think we're likely seeing, and I think some of the other numbers show that on the pre-owned side, that in fact it's kind of one of these the new is bringing the pre-owned along with it, in that a person can look at a new versus pre-owned, and what's the trade-off? Well, because of John's correct comment that there's less inventory. We went through a period where we almost didn't produce any boats for several years, or it was a fraction of what normally is produced. They just don't exist anymore. So that the trade-off between new and pre-owned. I mean, if it is a relatively young pre-owned, there's a lot of people that want it. So that's going to have upward pressure on pricing, which is good if you're the pre-owned seller.
I think we have time for just one more final question. I've gotten a couple questions from attendees asking about the trouble that the industry is potentially in attracting millennials and getting them involved in boating. Why do you think it is, everybody on the panel, that the younger crowd is not getting into boating, and what can kind of be done at this point to fix it?
Yeah, I mean, I want everybody to weigh in on this, but from our standpoint, I mean, we're looking at it as in the bigger picture. We don't need younger boaters only. We need more people participating, and I don't, fine. We're kind of agnostic that. I want people to raise their hand and say, I want to start on the boating journey. And yes, it is of more value to us when they're 30 or 35, because they're going to be in it longer and therefore have a higher dollar potential, if you will. But if they're 50 or 60, if they want to participate, we want them to come. And I think we need to not just focus on trying to get one segment of the population to behave the way we want them to behave. I mean, there's some very real limitations relative to how much student debt is there, and just a different way that people live their lives now versus what it used to be. It is what it is. They're not going to change who they are or what they do to fit our needs. And so we want you to behave this way. Well, we need to figure out, pathways to boating for anybody who wants to come. And whether you're a millennial or something else, it's, we need to kind of open arms, and we're going to help you, no matter who you are, as opposed to saying, well, it's the millennials have to do it or it's not going to happen. We've got to figure out, and we've got to keep an open mind here, I think.
I'll just add a couple things quickly. I think something a lot of dealers are working on, and Noel may comment on this, but creating a better turnkey experience for people is I think absolutely critical. And I do think fractional ownership and making it easier to go boating for a generation that may not into acquisition of things as much as experience.
And I would just add, and I agree with both Peter and John's comment that we work in the RV industry also, and get asked the question from marine dealers quite often is, well, I know there's initiative Go RVing that's been very successful in the RV industry, and what can we do in the marine industry to? And we have Discover Boating, and I think it's been mentioned a couple times. It's giving people that opportunity to experience that boating. I think maybe it's a little bit easier to try camping. You can do it with a tent and a sleeping bag. But I agree also. I think the fractional ownership, some way to get more people to experience the fun of boating. I believe that's the key to growth in the future.
Also, there's one other point on that too, is that one of the things that we looked at when we were doing some of this work is just the numbers of people. It's there are plenty of people out there that we don't need to sell boating to. I mean, they may or may not be currently in a position to buy or not buy a boat. But if you look at the population, and we find if you want to use millennials, we can talk about millennials, but a huge number of those millennials actually grew up boating. They come from boating households. I think we had put it that about 44 million millennials, were actually raised in a household that has boating in its past. So it's not that it's an unfamiliar or not attractive. It's just that there are so many other so many things going on. But it's just how do we raise the consciousness, raise the awareness and the urgency of people to make that their kind of marquee method of relaxation or sport or whatever it is that they do. So it's just another little side comment.
Wonderful. Well, thank you all for your insights. And with that, we are unfortunately out of time. I want to thank our panelists again for participating in today's discussion, and I hope all of you listening found it as educational as I did. Just as a reminder, the webinar will be archived at boatingindustry.com/webinars, where you will be able to download the slides and listen to the presentation. I know we have some questions still in the queue that we weren't able to address yet, so we will try to answer some of those questions offline. And if appropriate, we will post those responses with the webinar archive. You can reach out to me, Brianna Listman at Boating Industry, and I will filter those questions through to our panelists. Again, thank you for listening today. And on behalf of our panelists, I want to thank you again for joining us. Have a great day.